How soon are global interest rates going to rise? What's the prognosis for the economy, earnings, and oil? And where is there money to be made in the markets? Well, these are not difficult questions for our three guests to tackle because they're all WealthTrack veterans. First up is Bob Dahl. He is Vice Chairman and Global Chief Investment Officer of Equities at BlackRock, who is also a respected money manager who runs 3 different large-cap funds for BlackRock, their core, growth, and value funds. And our next guest is John Montgomery. He's the founder and director of Bridgeway Capital Management, which manages a family of mutual funds using computer models and quantitative methods. John manages 10 of the 11 funds and has compiled a top-notch performance record since the firm's launch in 1993. And the oil market is coming alive once again, and to understand why, we are turning to Tom Petrie, one of the savviest oil and gas analysts and advisors in the business. Tom's longtime research and investment banking firm Petrie Parkman was bought a few years ago by Merrill Lynch, and he is now a vice chairman of Bank of America Merrill Lynch. So welcome to all of you. It's great to have you back on WealthTrack.
Thanks.
And I want to ask, get a sense of the room at any rate. First off, I mentioned earlier that Australia was the first of the developed countries to raise their interest rates. Was this the shot heard around the world, and when are we going to see the U.S. raise rates? Bob Dahl.
I agree. It is the beginning of a long process. But what you also said in the introduction was resource-based economy and maybe some emerging market economies where we have some pretty strong growth. The developed world remains too slow, does not have an inflation problem yet, hopefully not for quite some time. So I think to translate Australia moving to next month, it's the U.S.'s turn, I think that's a far cry from reality. It's going to be a long time. A
long time. John, do you want to weigh in on this?
Only that the direction is clear, absolutely clear.
That rates globally are going to go up?
Yes, and certainly in the U.S. as well. Just the amount of debt that we have at the national down to the individual level is going to help drive that. So it's certainly something to be prepared for.
All right,
timing, I wouldn't want to check in on.
Okay. Tom?
It's a precursor of what's happening with oil. And as we see that strengthening, the demand for oil, especially in the emerging countries, is coming back. It's coming back fast. China already, India with a lag, but coming. And so it's setting up the stage for higher prices. I think we're in a zone right now of, say, $55 to $75 a barrel, 80% of the time, briefly below the low end or above the high end. But if you look out to 2011 to 15, we're headed into higher territory.
Okay. Do you want to vote on interest rates, or would you rather stick with the oil patch?
Well, I'll stick with the oil patch.
All right. we tried, at any rate.
There's going to be some relationship there, though, however.
Yes,
they will correlate. Good
Absolutely.
point.
They will correlate. So if oil's going up, then interest rates will go up as well. All right, and that's
some pressure.
Your point. Okay. Bob, the U.S. economy, you are forecasting subpar, low growth, and low inflation. How subpar and how low growth?
Well, I'll take some guesses, Consuelo. 3 to 4% real growth for the second half of this year, 2 to 3 next year, which is long-term trend. Is very disappointing for a recovery.
Why?
So the important point is we are having a recovery. A lot of people still think we're in a recession. The economy is recovering, but there are headwinds. Paying down of debt, the financial system, the consumer have a lot of work to repair their balance sheets, and that's going to keep growth relatively slow. Not to mention all the government is doing and what comes from that, that is keeping pressure on our currency and lots of other things that we think hold back that rate of growth.
All right. Before we get depressed about this, however, you don't think that that means that equities, that stocks are going to underperform or have subpar growth. They certainly have not so far this year.
Correct. For the moment. I mean, there are a long list, I would posit, of cyclical positives, and then there are these secular concerns. And it's confusing to think about them both. And I think the way you rationalize it is say the cyclical positives are winning for the moment. Doesn't mean the secular concerns aren't a problem. But as long as those cyclical positives, the effect of the stimulus, the improvement in leading economic indicators, rising earnings estimates, the wall of worry that lets the stock market climb, all these things have, and we think will continue for the foreseeable future, make the equity market go higher. But the problems will come back and bite us at some point in time.